Welcome and thanks for joining us at EMII.com. I'm Kathleen Reddington with your Capital Markets Report. Today is Friday, August 1st, 2008. According to Reuters, Bristol-Myers Squibb Company has offered to buy ImClone Systems for $60 a share, valuing its biotech partner at $5.2 billion. The deal would give Bristol-Myers a greater control of cancer drug Erbitux. The unsolicited offer marks the latest in a spate of pharmaceutical biotech deals. The deal represents roughly a 30% premium over Wednesday's closing price. And staying with capital markets news, Bloomberg News is reporting that the board of Electricite de France is meeting to decide on a £12 billion offer for British energy group. Electricite de France is the world's largest owner of nuclear power stations. EDF may offer about 765 pence a share in cash or a mixture of cash and securities. The bid would be 6% above yesterday's close of 720 pence and 13% more than the close on May 15th, the trading session before British Energy said it received approaches. A deal would conclude more than 3 months of talks on British Energy's future after the company said in May it received proposals for a takeover. The UK government, which owns a 35.6% stake, wants investment in new nuclear plants to meet demand and is identifying sites for reactors. And in more capital markets news, according to Thomson Merger News, Whitbread plc says it will acquire 21 Express Holiday Inn hotels from Mitchells and Butlers plc. It will be in exchange for 44 Whitbread pub restaurants. The exchange has been made on the basis of equivalent EBITDA of around £9 million from the hotels and pub restaurants and an estimated value of £78 million for the assets to be exchanged. The transaction is expected to be earnings neutral in 2009 and 2010, with thereafter earnings enhancing. Whitbread pub restaurant sites will be converted to M&B brands. And in other capital markets news, the Nikkei is reporting that the California Public Employees Retirement System will emerge as a leading shareholder in Toyo Tire and Rubber Company, Kenwood Corporation, and Victor Company of Japan. This is with the dissolution of an intermediary fund operated by Sparks Group Company. Sparks set up a fund with CalPERS, which is the largest U.S. public pension fund, and others in 2003. But the Japanese asset manager decided to dissolve the fund at the request of CalPERS, which will receive portfolio shares in proportion to its 40% investment in the fund. And that rounds out today's Capital Markets Report. Thanks for joining us at EMII.com. For more details on these stories and much more, click onto our Capital Markets channel online, read the full stories and the latest developments.